I had a text message from a really good friend of mine who my audience will know because they've been on the show before as a guest and they're very well known in the UK. They texted me and said, please, can I ask you a question? If you had mortgages and you had a lump sum of money thinking about the future of AI, potential market crashes, would you pay off chunks of the mortgage or would you invest? My feeling is that stocks aren't really safe.
Well, there are a couple of questions embedded in that. So the first question is, would I pay off a mortgage? And the second question is, are stocks safe? So the mortgage one first to me is pretty easy. It kind of depends on your interest rate. So an interest rate is what you pay to borrow money. So when you get a mortgage, you're borrowing money, right? You're borrowing it from a bank or a financial institution. And they want to be paid for letting you use their money. And 3.5% or less, that's really cheap money. I would hold on to that. I would be in no hurry to pay that off. On the other side, if you have a mortgage rate that's, say, 6% or higher, well, when you pay off that mortgage, essentially you're locking in a guaranteed return of that interest rate, right? So if you pay off an 8% mortgage, you've locked in an 8% return on that money effectively. And then to finish the thought is if your interest rate's between those two, like 3.5% to 5.5%, 6%, then I would say it would depend whether you pay it off or not is what makes you emotionally more comfortable. And there's value in being emotionally comfortable. So if you are comfortable carrying the debt, you might say, well, I think I can do better in the stock market, so I'm going to carry it. If emotionally, like me, you just would rather not have any debt at all, then you blow it off.